It's been a strategy that's been around for quite a while, and it's not one that we've recommended any of our clients look into, but where you use your credit card on a monthly basis to pay for all of your expenses. And so you're effectively using the interest-free period, say 30 days on the credit card, and that allows your wage, 100% of your wage, to flow directly into your home loan. Now, in theory, the money goes into the home loan, so you reduce the amount that you've borrowed there, and you save on the interest, the 5 or 6%, and you rack everything up on the credit card at the interest-free terms for that amount of time. Now, over the time I've seen and heard of many people using it, I think it does work for about 2% of the population in reality. Once the banks have trained us to use a credit card, I think this is where spending does get out of hand, and it's like we're having a night at the casino where all our hard-earned, our folding money, our cash, just turns into chips. It just turns it into a game, and the reality between our hard-earned and our spending has been altered. So it really doesn't suit that many people at all. The other downside to it is obviously, I think people's spending habits change, and I don't think people have got the discipline. On the other side to it, I think that the type of home loan, the line of credit, where you have that constant, redrawing and paying, lumpy, your weekly wage into it, then that money at the end of the month goes and pays the home loan off. The loan to have, that's flexible enough to do that, which is called a line of credit. The interest rates for the line of credits are a lot more than some of the more simple principal and interest loans. Furthermore, with a line of credit, they give you a deposit book and they give you a checkbook. So they've essentially turned your home loan into an open bank account, and what the banks want at the end of the day is for you to be in debt for longer, which means they get paid more interest. So once you've got a checkbook attached to your home loan, you're free to write out checks for whatever you like, and for things that you may not necessarily purchase. So that extra flexibility, I think, is a significant downside, and encourages people to go further into debt for longer, which is exactly what the banks want.